welcome back to today's Daily Dose of Market Insights. Today will be Tuesday, the 2nd of September, 2025. So before we jump straight into today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape yesterday in terms of economic data, news release, and as well as the impact on the broad-based cross-asset classes, and also relevant news flow and data that has taken shape earlier this morning, Asia session, before the start of our daily dose at 11 a.m. and their respective impact on the various broad-based cross-asset classes. And we will actually share with you some technical analysis outlook as well, short term. And to round that up, we will also highlight what are the key data or events to watch out for the session today. So let's start with yesterday first. Yesterday was a rather quiet session. Why? Because the US market is closed for a Labor Day holiday. So the cash stock market is closed, so no trading for yesterday. So very interestingly, at the start of today's Asia session, what we could see over here on my screen is the futures market, that means i.e. the Nasdaq futures, and the E-mini futures was rather lackluster. So the E-mini futures, which is the S&P E-mini futures right now, is trading down slightly by negative 0.09%. The Nasdaq 100 E-mini futures, as we are speaking right now during today's Asia session, is trading also down slightly by negative 0.15% over here. But what's interesting over here is that if we go through the Asia session, the Asia benchmark stock indices right now, majority of them are actually trading in the green, a bullish tone. So the Nikkei 225 is up by 0.25%. A bit of profit taking on the Hang Seng indices, where actually they rallied by I think 1% plus yesterday. You see the Hang Seng now is down by negative 0.2%. Whereas the China benchmark CSI 300 index, which comprises the component stocks of the Shanghai Stock Exchange and the Shenzhen Stock Exchange, down by negative 0.3%. If we go through the Southeast Asia, our STI Straits Times Index is up by 0.32%, and it continues to actually test the current all-time high area at 4,300. And the ASX 200, which is the Australia benchmark index, is down slightly by negative 0.3%. So it's a bit more on not really a kind of total risk off that as per se on the global stock indices. It's more some of them are actually doing some kind of profit taking and await for various key data that is out today. All right, going to be out today in the session later. I'll share with you what are the key data to look out for. So over in the FX market, yesterday the dollar continues to remain lackluster. So let me share with you the dollar index chart. What do I mean? So before we go into the daily chart of the dollar index, let me share with you a very broad-based chart. Have a bigger overview what's going on. So this is the US dollar index. So US dollar index, we can use it as a benchmark of a barometer of gauge of broad-based dollar strength or dollar weakness over here. And bear in mind, the biggest weightage inside the US dollar index is the euro. So what you could see over here is this is the monthly chart of the US dollar. So removing all those very short-term noises like the 15-minute chart or even the hourly chart. So since 7th of May, since May 2011, pardon me, it has been trading in this long-term circular ascending channel since May 2011 low. And it challenged this channel during June this year, where it actually showed a bearish Marubozu candlestick. Then thereafter, we see a price action rebound in the month of July with a gain of 3.37%. Right, let me share. Yeah, 3.37%. Then thereafter, it ended the month of August not too long ago. That was last Friday with a negative loss of negative 2.2% as we are speaking. So what you could see over here is that for the month of August, you also try to now test this very important support level at 97.3, which is the lower limit of this long-term ascending channel since May 2011. So 2011 until now, we talk about is about close to what, more than a decade. So it's about a 14-year-old ascending channel support. So if this ascending channel support gives way and we have a monthly, a clear monthly close below it for the month of August, I mean, going forward, it could represent a significant move on the FX market. That means, i.e., we may start to see a pronounced US dollar weakness going forward. And if you look at the daily chart of the US dollar, so the daily chart of US dollar, yesterday it continues to inch downward as well. So yesterday the US dollar shared a negative 0.16. So now it's on the daily chart of the US dollar. So I switch from a monthly to daily to give you into perspective what is the US dollar is doing today. So the US dollar continues to trade downwards, and right now is holding below the 50-day and the 20-day moving average. So these two lines here is the 20-day and the 50-day moving average, and the key support will be at this 97.30, which is the lower limit of this turquoise, the lower limit of that long-term circular ascending channel that has been in place since May 2011, represented by this turquoise blue line over here. And what we could see is that during today's Asia session, the dollar managed to bounce right now at 0.12%. So what causes this dollar to bounce is actually the weakness on the dollar yen right now. Right, so what you could see over the weakness on the Japanese yen, that means strength on the dollar yen. Okay, pardon me, a bit of tongue twisting over here. So this is the 5-day rolling performance of the US dollar against other major currency as we are speaking right now. So what you could see over here is that in this 5-day rolling performance, the dollar is the strongest against the Japanese yen, which is up by 0.12% over here. So if you look at the 1-day rolling performance chart in the last 24 hours, we see the dollar yen also spiking up, and right now is trying to actually trade downwards again. So what causes this earlier Asia session spike today before the start of daily dose is due to a key speech by a BOJ official. So BOJ Deputy Governor Hermino spoke this morning. What he spoke over here is that it's a rather mixed we call it a remark. So the headline was saying that despite 3 interest rate cuts so far, inflation is still high and real rates are still low. So by looking at this headline remark, BOJ Deputy Governor Himeno is actually in favor of a continuation of a normalization monetary policy in Japan. That means keeping up hopes that one more potential interest rate hike not cut that could take place in Japan this year. That means BOJ may enact another interest rate hike. So by right, that should actually see dollar yen coming down rather than pushing up over here. So the reason why dollar yen actually did that pop up a spike up earlier on in the last 2 hours was because of this rather remark towards the end. He actually mentioned that, where is it over here? Yeah, this is it. BOJ baseline scenario is for the underlying inflation to stagnant, but eventually reach 2%. So he's saying that inflation could actually stagnant. That means instead of inflation going up gently, but it could actually stagnant, but eventually reach 2%. Underlying inflation is recently quite close to 2%, but has yet to reach that level. So based on these two remarks over here, it actually kind of negate off his earlier remark that he is in favor of more interest rate hikes in Japan, because of this remark saying that inflation trend in the Japan is still lackluster. So that actually negate off his earlier so-called rather hawkish remark and causes the dollar yen to actually spike right now. But the reason why dollar yen also hasn't not managed to gain much momentum to the downside, because it's still trapped within a minor range configuration since August this year. So what do I mean by that? So if you look at the dollar yen chart itself, this is the hourly chart, very clearly it's been trading in a minor sideways range since 5th of August over here. All right, and yesterday, right now the spike, this is the earlier spike that causes, and right now there is actually some kind of profit taking from this spike because it's going to trap within this range. And right now, the spike is coming very close to this all-important short-term pivotal range resistance that we highlighted earlier on at 148 figure slash 148.18 level. And the bottom part of this minor sideways range, where yesterday price action managed to find support very closely again at 14670, 14640. So yesterday's low during the European session was 146.78, very close to 14670, 14640, and it continues to get rather choppy within this minor range configuration. All right, so that's for the FX market over here. So today's biggest another biggest mover for today will be gold price over here. So if you look at gold price itself, what we could see is that gold price continues to have a positive follow through over here. So after that bullish breakout of 3,435 in gold price on Friday, where it managed to close at 3,447, and it extended its gains yesterday as expected by positive 0.84%, closed at 3,476, and today it did a prop over here to actually slightly bridge to actually has an intraday bridge above the current all-time high, which is 3,500 printed on the 22nd of April. So today's Asia session high was at 3,508. Back down a bit, and right now it's trading at 3,494 over here as we are speaking. All right, so there's a bit of what I call a hesitation. So will this hesitation lead to a failure bullish breakout that we see on last Friday? Later I'll touch on more on the technical analysis on gold. All right, so and another news flow I want to highlight over here is more pertaining to the the view of the sell side analysis. So yesterday there was actually a Bloomberg report saying that AI euphoria, pardon me about tongue twisting, AI euphoria to fuel another 20% S&P rally by the end of 2026. Evercore ISI says. So Evercore is a sell side brokerage house, a sell side research firm in the Wall Street. All right, so let me highlight to you what's the key point. So US stocks can rise by another 20% by the end of 2026. This is due to this artificial intelligence demand. Okay, so the S&P is forecast to reach 7,750 points by the end of next year, with a new technological revolution lifting stocks, multiples, and society to news high. So basically, this Evercore ISS strategies is actually one of the most optimistic or bullish forecasts that they actually give on the S&P 500 index over here. So if you look at the chart over here, so this is the average year-end target by market sell-side analysts, which is slightly below the 6,500 level, whereas you see the Evercore ISS end of 2026 target is rather quite higher over here. So Emil, which is the lead analyst of ISS, Evercore ISS, the 2020 target is the highest on the street so far, according to data compiled by Bloomberg. So something very interesting over here, despite the fact that some of we call it media reports saying that we may be on the brink of an AI bubble, but however, this particular sell-side research firm, as reported by Bloomberg, is still optimistic in this ongoing bullish trend on the US major stock indices that's going to be led by this AI euphoria. All right, something to look out for. So with that, that ends the first segment of today's Daily Dose. So let me share with you the second segment, which is a bit different today. I will cover a chart of the day to look out for. So today's chart of the day will be focusing on gold XAU slash USD over here. So this will be the short-term chart of gold XAU slash USD. So gold today tested the current all-time high level at 3,500. So what we could see over here is that the RSI right now is actually has really hit the overbought level again, and now exiting from the overbought level as we are speaking right now. So there could be a form of minor pullback taking shape. So this minor pullback, first support level to watch on this minor pullback will be very close to will be yesterday's European session swing low area at this 3,469 over here, 3,469, And the tighten short-term pivotal support for today to maintain this bullish bias will be at 3,451. So what is this 3,451? It's very close to this pullback line of this minor ascending channel. Upper limit, which is a former resistance level, now turns into a pullback support, very close to it, representing a bullish acceleration in price action of gold. And 3,451 also coincide with the former minor swing high of 16th of June. And if we redo the current bullish impulsive minor up move sequence from the low of 22nd of April, the retracement all the way up to the current intraday high today is very close to the 23.6% FIBO retracement. So watching very closely for any form of a minor pullback. As long as this minor pullback managed to be held above 3,451, tighten short-term pivotal support level, the bullish bias still remains intact for gold XAU/USD, with the next resistance coming in at 3,520/3,524, followed by 3,536/3,548, which is defined by a cluster of FIBO extension levels. Only a bearish breakdown below 3,451 will negate today's bullish bias to kickstart another round of minor corrective decline sequence, revisiting the former ascending triangle range resistance now turned into a pullback support level at 3,435/3,432, which is also confluencing with the minor ascending trend line that is now taking form since the minor swing low of last Friday, 22nd of August. Only a breakdown below 3,432 will trigger a deeper minor corrective pullback towards 3,405. All right, so now let us now touch on the last segment of the daily dose, which is the key economic data and events to look out for today that could have an impact on the various broad-based cross asset classes. So today will be Tuesday over here. So very quickly, Tuesday, during the start of the European session, we have this all-important aggregate Eurozone core inflation rate flash figure for the month of August. So market is participant a slight dip to 2.2% from 2.3% earlier print on the month of July over here. So if this print continues to remain rather lackluster, below market expectation, let's say 2.1 or 2%, that could actually see some downside pressure on the euro. So euro dollar, but if the print continues to come in within expectation, that means i.e. That could be not much of a deflationary risk or deceleration in inflation trend in the euro zone, and that could actually imply that the previous interest rate cut cycle, the current interest rate cut cycle in eurozone may be coming to an end. So that could influence the euro dollar, the euro crosses, and some form of the Germany 30 CFD index today. So that will be out at 5 p.m. Singapore time, and followed by the rather important ISM manufacturing PMI data for the month of August. That's for US, out at 10 p.m. Singapore time. So market is expecting a slight recovery to 49 from 48 print in the previous month of July. So this particular key economic data point for key economic data for the US, which is the ISM manufacturing PMI, out at 10 p.m. Singapore time, could potentially impact the major US dollar pair and the major US stock indices. And thereafter, there will be a quiet US session without much key data to chew on over here. So that sum up today's daily dose of market insights. I'm Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.